Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Dia with The Street, and together we bring you Morning Call Express. Scott, let's get right to it. Another big day of gains Tuesday, but the markets closed off their highs, kind of losing steam in that last hour of trading. I'm seeing a pretty unconvincing rally this morning. What are you looking at?
Well, on the third day of any move, traders start to get a bit cautious because lately, since August, all you could be long is for 3 days, and then they sell in the upper end of the range. And also on the short side, you better be covering in the lower end of the range. So this trade has been consistent, but obviously the consistent trade tends to change at some point. So right now, yesterday, most traders were taking profits like myself into the strength because it is going to be a holiday shortened week.
Right.
But at this point, you have the fix in with quarter end, buy only funds, having money to put to work, the headlines that continue to come out, whether they're good or bad. And it does feel like the market could go higher, but this is a really good spot to lose money. So
would you maybe keep some, I know that you sold, but for some people who still have positions, do they hold on to some of that in case we do go higher, or should they really be getting out right here?
I think at this point, if they have a longer term time horizon, they could trail it. They could say, okay, I'm going to hold these positions, or I'm going to be in the indices if they hold above this area, because if we hold higher and go sideways and digest this few-day move, it would be constructive. So if you look at the chart of the S&P, let me show you what I'm talking about. Yesterday, we came in to the upper end of this range where we sold off, but we're opening pretty close to that. So I think as resistance, you can watch 1195, and then the 50-day moving average is around 1207. As you can see, we haven't taken this moving average back in a while. Last time we were here, we failed and failed miserably. Let's see if we go up and touch it, but hold higher. If we could continue to hold above 1160 over the course of the next few sessions, I think we continue working higher, and then we'll have 1220 to 1230 to deal with.
I was going to ask, is that 1160 the area where you just got to dump and run?
Yes.
If we wind up breaking below that?
If we break below it, it just shows you it's just a range trade. It was a 3-day hold. It was a good cash flow trade, but it might not amount to more than that. But if we continue to absorb the headlines, we continue to go sideways in the upper end, there's a chance that we finally break to the upside, and then perhaps you can go from macro tier 1 long to macro tier 2. But we'll wait to see if that happens.
Lightly invested to more heavily invested. Okay, I want to go to the laggards that you had been buying, the financials. We're pretty strong Tuesday, but then retreated, especially after Meredith Whitney lowered earnings estimates for Q3 in 2012 for Goldman Sachs. So are you totally out of this trade now then?
At this point, I sold my financials. 3-day move. For me, it's been prudent to take that 3-day move. The XLF had a great percentage move. A lot of the banks, people are like, oh my goodness, 3 days up in a row. I think even Bob Pisani quoted me at 9:36 saying, Scott Redler says, don't get excited here. But anyway,
nothing's changed for those banks, that's for sure.
If you look at the XLF, you'll see that here was your 3-day move. Okay, from the low end of the range, 1150 back to about 1250. Nice percentage move into resistance. I would say if you want to trail these banks, you could be long this as long as the XLF holds above 12 to 1210. And if you look at Goldman Sachs as a quick gauge, because that was the one downgraded, you will see nice 3-day move from 90 to about 104. If Goldman Sachs could hold and be a barometer for the banks above 99, there's a chance that this downtrend gets taken out, we go to the upside, all the bad news is pressured in, and that's when things can change.
All right, real quick, want to go to the OIHs because it had the same kind of trade that the financials did, but energy prices or oil prices are really holding up here on $84 a barrel, so maybe there's more support.
This is another laggard group beaten up that we tried at the time. We got in at 108 and change on that 80-20 trade. I did sell it yesterday, and it also sold off at the end of the day. But nice trade from 108 to almost 117. Same thesis here. If you want to trail it, be long and hold it above this 112, 112.60. If you could stay above this area, perhaps it moves back to the 130 and you get a bigger move. But if it just turns tail here and goes lower, it's the same old, same old.
All right, real quick, let's round it out here with Apple and Amazon. Two of the big leaders did not hold up well yesterday. What kind of direction can you glean from them? Well,
Apple had that choppy tape on the report that the iPad might have 25% less supply. Anyway, it was weak yesterday. I'm not used to Apple being down and the tape being up. I would say for Apple, as long as it holds above 395 to 398 over the next few sessions, constructive. If it starts to break below that and close below it, it could get a little choppy. And on Amazon, I want to show you real quickly because this is something I'm not used to either.
Especially when they have a catalyst today, they're supposed to announce their tablet, so that's interesting.
So you have a high, and then yesterday we opened up, made a lower high, closing the low. If we start to break below 220, we're going to see some technical weakness here, and it could make a move down to 211. So watch both of these, Apple and Amazon. If they break and close below these levels, the market might start to get scared, especially tech.
And Scott, rounding it out here, gold and silver, sort of treading water today after having that big move yesterday, but we did close off the highs. Do you want to be waiting here and just finding direction?
Same thesis. We opened down near that 200-day moving average. Some guys covered shorts, went long. I did sell my GLD yesterday, but if you're holding it, just put a stop in and forget you own it. Maybe you stole it at a cheaper price. I would say on the GLDs, if it holds above 159, 160, stay with it. You could get a continued move back to bigger resistance up to about 165 to 170, which would be a nice gain from here. Just have your stops and forget you have it.
All right, fair enough. And that is your Morning Call Express. For more of Scott's stock picks and trading strategies, check out the entire Morning Call on the Street.